Welcome once more to Dunzo Onwordi Accountancy tutorial, where we deal with all our topics practically, carry out computations that will help you in understanding the subject matter. Today, I'll be going through budgeting, and this is part 2 of budgeting. Last time, I dealt with it and we got as far as producing our sales budget, production budget. We arrived at the material unit budget, and so we need to produce the material purchase budget. I will take you through the other information provided to complete this budget. Here we're now given selling administrative expenses budget. At bakers, variable selling and administrative expenses are 50p per unit sold. Fixed selling and administrative expenses are 70,000 per month. Of this 70,000 per month, 10,000 is depreciation, and as we all know, this does not involve the movement of cash. So we will be deducting that out of that 70,000. We're also given the overhead budget, and the items that made them up are the indirect labor, indirect material, utilities, rent, insurance, and maintenance. So we've been given all these cost elements and the associated costs for the months of April, May, and June. The total of this for each month is 56,000 for April, 76,000 in May, and 59,000 for June. Direct labor budget we need to be produced again, because we are given the quantity produced and the rates of direct labor per unit. The rate is 0.1 hour is used to produce 1 unit. Okay, we mean 0.1 hour of direct labor. We also informed that for the next 3 months, direct labor workforce will be paid for a minimum of 3,000 hours per month. And this is at a wage rate of £8 per hour, regardless of the hour worked. No overtime is paid. So we will be computing the direct labor budget again. Further information we are given to help us produce the cash budget. At bakers, all sales are on account. That is, it's not a cash sales. Customer will receive goods and pay later, depending on the credit terms given. Here, the company's collection pattern, that the credit pattern is 70% of sales made are collected in the month of sale, and 25% are collected the following month, which means that there's 5% is uncollected. Probably they call it bad debt. At 31st March, the account receivable balance was 30,000, which will now be collected in the month of April. Breakers pays 40p per kilo for its material. 1/2 of the month purchases are paid for in the month of purchase, and the other half are paid for in the following month. No discount is given. At March account, that's it, last month, before the quarter starts, the payable account balance stood at £12,000. This will be collected in the month of April, the beginning of our quarter. So with this information, let's try and see if we can complete this budget. Let's begin to extract the vital data that we'll be needing to complete our budget. At Baker's, variable selling and admin expenses are 50p per unit sold. So let's get that done. April, May, June. April, May, June. Units sold are from last period. Let's quickly go to our next period and touch the units sold. Units sold are 20,000. I'll make this again. Everything I do here will be in thousands to help with space. 20 in April, 50 and 30. 50 in May, 30 in June. And they say the variable selling and admin expenses, variable selling and admin are 50p per unit. So if it's 50p, 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 so that will just give us 10, 25, 15. So this is my variable selling and admin expenses in pounds. 10,000, 25,000, 15,000. Fixed selling and admin expenses are 70,000 per month. Now the fixed part of it, fixed selling, admin are 70,000 each month. Of the 70,000 fixed expenses, 10,000 is depreciation. So we need to deduct depreciation, 10,000 off that, 10,000, 10,000, of that. So it means that my selling admin expenses in total, both variable and fixed, will be 70 in April, 85 in May, and then 75. Am I right? 85 minus 10, 75 in June. Okay. So these are the figures I'll be needing to complete my budget. The overhead budget has been given. I spelled those out at the beginning. So the overhead budget is 56 in April, 76 in June and May, and 59 in June. Direct labor budget. We are also told that each unit produced requires 0.1 hour of direct labor. The labor budget, the unit produced were unit produced were 26 in April from our last record, 46 in May, and 29 in June. At 0.1 hour, that will give us 26 times 0.1, 2.6 hour. 46 times 0.1, we got 4.6 hours, and 29 times 0.1 will give us 2.9 hours. Right, these are in thousands, remember. We also informed that for the next 3 months, the direct labor workforce will be paid for a minimum of 3,000 hours at a wage rate of £8 per hour, regardless of hour work. So this is the hour works, but remember they were guaranteed minimum is 3,000, yes, and 3,000. In essence, because they work less than guaranteed, they will pay 3,000. They work more than guaranteed, they will pay what they worked for. And here again, they work less than guaranteed, they will pay the 3,000. At £8 per hour, it will now give us 3 times 8, so they will be paying 24,000 here. 4.6 times 8, they will pay 36.8 here, and another 24 here. That is our labor budget. Labor budget. Okay, so we got our values to complete our budget. Variable and selling admin, we give 70, 85, 75. Overhead budget, they gave to us at 56, 76, 59. And the labor budget, which we arrived at to be 24,000, 36,800, and 24,000 here. So let's move on with the further information here. Now we'll be giving some other information about cash. At Bakers, all sales are on account, so the sales will be are made for on account. The company collects 70% of their sales in the month of sale and 25% the following month. 5% is uncollected. So let's begin to slow this in, because let's do it line by line, and if we need to come back, we can come back and complete the gap, because you cannot wait until you digest all the information before you start. Sometimes you have to follow the line by line approach. The line by line approach is now this. I've got most of the budget, inside the budget. I think the cash budget is what I need to do now. Cash budget. April, May, June, and total. The way I will approach this is the upper part is the receipts, cash receipts, and the lower part is the cash payments. So we get the total of cash receipts, get the total of cash payments, we have net cash flow, then we bring in the opening cash at the beginning, add it to the net cash flow to arrive at the closing balance. So let's start. Probably the best thing to slot in the figures we know here. We know that variable expenses has been given here. So, and they are payments. Since they didn't give us any pattern of payment, and we assume they are paid as they are incurred. That will be the assumption. They didn't tell me whether there were some credits in the payments given. So just give us the figure, so I will assume they are paid as incurred. So payments, my payment line will be from here, rule it, so payment from here and receipt from up. So payments, variable, selling, admin, for short, 70 in April, 85 in May, and then 75 in June. So I've done this. My overhead budget given to me again will be overhead 56, 76, 59. I've done this. My labor budget again will be labor 24, 36.8, and then 24. Okay, I've done this. So all in front of me, I've extracted and entered into the cash budget. Now let's see, begin again and see if there's anything we have not done. At Bakers, we said, okay, the sales are collected 70%. So cash collection. So for April, so we go and find what was our April sales from our last budget. Quickly see if you can lay your hand to last period budget. See if you can get your sales. Very important. Sales budget. We got it here. April was 200 was sold. 200. That would be 70%. Is it 70? They said, I think it's 70. Yes. Right. 70% in the month of sale. So for April, 200 times 0.7. So 140 will be collected here. 140 times 25%. So 50 will be collected in May, and then the balance is lost, uncollected. So we now go again for the May sale of what? Let's check quickly. May sale is 500 times 70% again in month of May. So 500 times 0.7 will give you 350 in May, collected in May. 500 times 0.25, 125 in June. And then the balance is lost. So what did we do in June? June sale was 300 times 70% in June, 210. So we don't worry about the following months. There will be opening figure that will be collected when that time arrives. So these are collections done for our cash sales. Let's go probe into the information given to us again, because there are so many information flying around here. If you are not careful, you will leave out some of them. The 31st March account receivable balance of 3,000 will be collected in full. So there's balance from March. As I remember, I told you the one we have not collected here will be collected next time. So let's collect the March 31st March balance. And they say that is 30,000. Balance of 30,000. That will be collected in April, 30,000. Baker pays 0.4 per kilo for its material purchase budget we need to be done. So material purchase, we need to do that. Don't forget that we need to do that. Okay, so whatever material we purchase, quantity or unit purchased times 40p per kilo will give us, and they say 40 fee, 0.4, 0.4, 0.4. So let's go and dig out the quantity we bought and we purchased last time. So we identify that the material we purchased last time, our material purchase budget was 140 kilo in April, 1.4 5 in May, and then 142 in June. So that will give us the budget of 140 times 0.4, 56 in April, 221.5 times 0.4, 88.6 in May, and 142 times 0.4, 56.8 in June. So this is our material purchase budget. Let's put that into the right perspective or position after we have considered how the payment pattern. Let's see what they say the payment pattern will be. 1/2 of a month's purchase are paid in the month of purchase, and the other half paid in the following month. So that's half this time. So for material payment, okay, for June and for April we pay 28 now and then 28 next month. For May, which is 88.6 divided by 2, we pay 44 in May, 0.3 in May, and 44.3 in June. And that of June, which is 56.8 divided by 2, we pay 28 in month of June, which is 28.4 in month of June. So we have done our material purchase budget. The balance will be collected or we pay next month. Let's read on. It takes a bit of pains taken to complete budgets. So you got to follow the information line by line, and you have to have patience. Otherwise, you will miscalculate or get things wrong. No discounts are available. We've done that. 31st March account payable balance was 12,000. So there's amount brought forward just like we have the 31st March. Yeah. We have another 31st March brought forward of payable of 12,000. They said 12,000. That we paid in April, 12,000. Okay. Remember, these are brought forward from last month. Baker borrows and pays loan on the last day of the month. Okay. We haven't been given other. Pays a cash dividend of 25,000 in April. They pay dividend. Dividend. In April they said 25,000. April they paid 25,000 dividend. So slot it in there and keep on reading. Purchases 140,000 and 143,700 of equipment in May, and 48,300 in June, paid in cash. So they paid this fully in cash. Equipment. In May 143. In May 143. Point what is that? 700.7, and then in June they paid 48.3 again in June. Has April 1st cash balance of 40,000. They have an opening balance of 40,000. So let's try and rule out, get our balances of receipts and payments. So let's see the calculation is work now. 140 plus 170 here, 400 here, and this is 533. So this is the cash receipts for the periods given. Now let's calculate the cash payment. 70 plus 56 plus 24 plus 28 plus 12 plus 25. Give us 215 here. 215 in April. Let's see May. 85 plus 76 plus 36.8 plus 28 plus 44.3 plus 143.7, which give us 413.8 in May. Let's see June payment. 75 plus 59 plus 24 plus 44.3 plus 28.4 plus 48.3, which got 279.9. So let's find the net of this receipt and payment. 170 knock off 215. You have a negative for 45, negative here. Negative 400 minus 413.8. You have a negative of 13.8 here. Then 335 minus 279. You have a positive 56 here. Positive 56. So bring in opening balance. They say it's 40 opening balance. Now we add opening balance to your net cash flow. This is net cash flow. CF is cash flow. That will give us a closing figure of 5 negative, I think. 5 negative. The 5 negative will become our 5 opening figure here, negative 13.8 plus 5 because of 18.8 negative. That will be our opening figure here, 18.8 negative. A positive of 37.2. So this is our cash balance. Okay, it takes time to arrive at, but what you need to do is to be patient in extracting your figures. Try not to omit any budget item, and then follow the instruction given to you by maybe the admin or the budget committee or the budget manual. And if it's an exam, follow what the examiner has said for you. Make sure you follow them line by line. Don't question their figure. Just follow the instruction and do as they say. They told you 70 was received in that month. Put it there. 25% the next month. Get it, figure, calculate figure and put it there. They said 5% is uncollected. It's not for nothing you can do about that. It's uncollected. Just follow what they say. Get your figure in the right position. Make sure your cash is, receipt is up and payment is down. Get your total cash inflow and get your total cash outflow. Get the net balance. Then bring in the opening figure to get your closing balance. Your closing balance become your opening for the next period. Very important. You do that. That's it. Cash budget completed. Let's put some tidy up headings. This is cash inflows. Cash inflows for April, May, June. Cash outflows for same period. So this is the outflow. In total going out, and this is the inflows coming in. Inflows is closing balance. Closing balance. All right, very good. Now This is very selling admin in total. Expenses in total. For the variable and the fixed. Variable and fixed. So this selling admin in total is the total selling admin. So I had it selling admin expenses. So the total of them. Okay. That's it. Cash inflow, cash outflow. And this is net. Cash flow. Opening balance, closing balance. Right. This is our cash budget completed. So we got everything here. We got the sales budget, the production budget, the labor budget, overhead budget. Everything that make up the master budget has been computed, and this is the cash budget for us to use. So if you like what you've seen, please give us a thumbs up. Most importantly, please subscribe, so that this is the way you can help us, encourage us to keep producing such work. You all can see the time and effort it takes to compile and produce this. And again, after watching and liking it, please do share to your colleagues so that they also will benefit from such work. All right? Please do subscribe. Until I see you next time, take care of yourself and goodbye.